Thank you. Good evening, everyone. This is Smith Shah from Pareto Capital. We represent investor relations for Salasar Techno Engineering Limited. On behalf of Salasar Techno Engineering Limited, I welcome you all to our Q4 and FY21 earning conference call. I have with me from the management, Mr. Shashank Agarwal, Joint Managing Director, and Mr. Pramod Kala, Chief Financial Officer. We will have a brief opening remark from the management, followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ. Salasar Techno Engineering Limited will not be in any way responsible for any such action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements. I would now hand over the call to Mr. Shashank Agarwal for his opening remarks. Over to you, sir.
Thanks, Smith. Good evening, everyone, and welcome to Q4 and FY21 earnings conference call. I hope everyone is keeping safe and healthy during these tough times. Let me start the call by taking you through some of the key developments during this financial year. The year gone by has been a challenging one, starting with the nationwide lockdown, which led to a lot of uncertainty and business coming to a standstill. However, once the opening of the economic activities started, we have seen things getting back on track. I'm happy to share that our manufacturing units and projects had been running smoothly post the initial hiccups during early this year. In fact, this year we have seen some key operational developments which will shape our growth journey going forward. With strong expertise and experience in the steel fabrication, during this year we successfully completed our plant capex to set up new units to manufacture large and heavy structures. This unit will provide heavy structural steel fabrication for bridges, power plants, airport hangars, metro stations, stadiums, and prefabricated structures for buildings. The new unit has been installed with a capacity of 15,000 tons per annum, which is one of the largest installed capacity in northern India for manufacturing of such products. This new product offering will not only help us in opening up of new revenue stream, but also lead us to become one of the leading players offering total customized steel structures for all users. We have incurred a total capex of about 20 crore rupees on this new vertical. The unit has been commissioned and was ready for commercial production as on March end. As on date, we have an order book of rupees 70 crores under this vertical to supply about 8,400 metric tons of structures. The orders we have received the various reputed companies in India, and I'm happy to share that the dispatches against these orders have started early this week. Along with the strengthening and increasing domestic presence, we are also working towards increasing our exports of telecom towers. During the year, we entered into a 2-year supply agreement with American Tower Corporation to manufacture and supply telecom towers for African markets. And in the very first year itself, we have received and successfully executed export orders to APC worth rupees 27 crores. During the year, our export revenue stood at rupees 35.5 crore versus rupees 27.8 crores as in last year, a year-on-year growth of about 28%. On the transmission and distribution segment, we are seeing increased tendering, but we are also being selective in the projects that we bid. The total order book as on 31st May 2021 stands at rupees 988 crores, and this mainly includes EPC orders outstanding that is pending to be executed as on 31st March for a value of about 260 crore rupees. EPC orders which have been received after 31st March, then during last 2 months, that's April and May, for about 326 crore rupees. We are also lowest bidder and waiting for the LOI for EPC orders was 80 crore rupees. And we already have orders from our manufacturing, heavy structures for our new plant of about 70 crore rupees. And we also have a pending order which is under execution for Bangalore Metro for track laying, along with our JV for about 250 crore rupees. Now coming to the financial highlights for the quarter and the year ending 31st March 2021. I'm glad about the performance our team has delivered during these challenging times. On a consolidated basis, we have registered highest quarterly revenue for any particular quarter, that is for this quarter 2021 at rupees 211.5 crores. This is a 95% year-on-year growth over Q4 FY20. This has been driven by robust growth in both our steel structures, manufacturing, as well as EPC business. EBITDA for the quarter stood at rupees 19.2 crores compared to rupees 9.6 crores in Q4 FY20, reporting a year-on-year growth of 100%. EBITDA margin for the quarter stood at 9.1%. The reported PAT for the quarter stood at rupees 9.9 crores compared to rupees 3.1 crores in Q4 FY20, an increase of 163% on a year-on-year basis with a PAT margin of 4.7%. For the financial year FY21, our revenues from operations stood at rupees 596.6 crores compared to 536.3 crores in FY20, a year-on-year growth of 13%. And that is when we have been able to work only for about 10 and a half months. EBITDA for the year was rupees 57 crores compared to rupees 51.8 crores, a growth of 10%. PAT for the period stood at 29.9 crores compared to 22.4 crores in the previous year. To speak about the segmental revenue contribution in FY21, revenues for manufacturing of steel structures stood at 80%, EPC power transmission at 14%, EPC railway electrification at 6%. I'm happy to share that the Board of Directors has considered and approved issue of bonus shares to the shareholders in the ratio 1:1, subject to approval of shareholders. For the financial year 2021, the Board of Directors have recommended a final dividend of rupees 1 per equity share, that is 10% of face value of rupees 10, subject to approval of the shareholders. It is important I mention here that 10% is on the increased equity, which would be post-bonus. So on the current equity, it is 20%. I would also like to update you that during the financial year, the company has raised funds of rupees 17.1 crores by way of issue of 10 lakh preferential share warrants. And this funds were primarily utilized for the new CapEx in the new vertical. Another development that I would like to share with you is the appointment of Mr. Uttam Prakash Agarwal, a chartered accountant, as an advisor to the board. He is a chartered accountant with over 3 decades of experience in the field of taxation, finance, and restructuring. In the past, he has carried out statutory audits to the government undertakings and mutual funds, and he has served on the board of many big companies. Our company wishes to gain from the vast experience he possesses and would like to further improve on the corporate governance in our company. We are very confident about the opportunities in our focus sectors. We continue to see a lot of opportunities coming in our way as the telecom operators are working towards improving their connectivity. Also, in the near future, once the rollout of 5G begins, we expect exponential rise in demand of telecom towers. Increasingly, we see good demand from power and railway EPC segments and also our new steel structure segment. We remain committed and are working towards our set targets of achieving higher profitable growth and becoming one of the leading players in our industry. I would like to thank all our stakeholders for their continued support and faith in us. And at the same time, I would like to thank my team at Salasar for putting all the efforts together. This is all from my side. I would now ask the moderator to open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wishes to ask a question may press star and 1. The first question is from the line of Shagun Sharma, an individual investor. Please go ahead.
Hello, sir. First of all, I wanted to congratulate you on such excellent numbers. I had 2 questions basically. So first, as I understand that telecom is a significant revenue contributor for the company. So, and it is also heard that, in the coming quarters, 5G trials will start in certain urban and rural areas. So, what are the prospects as a tower manufacturer? If you can please elaborate, sir.
Okay. So, thank you, Shagun. And telecom, of course, is our main revenue generator. We started as primarily as telecom tower manufacturers, and we continue to be the market leaders in telecom tower manufacturing and having maximum number of market share in the market. As for the telecom towers required for 5G, okay, the 5G trials which are going to happen are only the trials, at a commercial level by certain companies, which is a precursor to the major expansion which is going to happen was the spectrum adoption early next year. And we are already seeing that activity happening at the customer end, wherein there are a lot of demand coming in from them in terms of increased and improved designs for 5G, which we are working upon. We have already put few sample sites for them, and we expect a lot of growth coming in once the 5G is actually launched commercially early next year. But even today, except barring these 2 months, April and May, wherein the site build was held up because of pandemic all over the country, and the customers had decided not to roll out anything because of the health issues. The customers have now started coming in, and the work on the sites has started, and a lot of expansion is already happening for 4G. So I would like to mention here once again, though I've told this in earlier Concalls also, for 5G there will be a lot of standalone sites, whereas there will be a lot of non-standalone sites also. So non-standalone sites would be where the 5G would be deployed on the existing towers of 4G, and the standalone sites would be where only 5G antennas would be there. So there's a lot of expansion happening for the 4G at the moment, which ultimately are going to be used for 5G as well.
All right, sir. And so my second question pertains to the railways front. What kind of opportunities are we seeing, and what is the current order book in this segment? And are there any new projects which we have bidded for, sir?
Yeah, so we keep on bidding for new projects, and as on date for railways, we have a pending order book of about 76 crores.
Okay.
And we also have a pending order book wherein we are doing track laying for Bangalore Metro for 250 crores through our JV Salasar. So in total about 325 crores is something which is under execution. And probably we have bidded for about another 300 crores of few new projects wherein the tenders have been submitted. Okay. And I see a very robust growth in the railway business as a government focus area. and there's a lot of focus by the government for increasing railway electrification and overall development of the railways.
All right, sir. Thank you so much, sir.
Thank you. You're welcome.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Dheeral from Phillip Capital. Please go ahead.
Yeah, am I audible?
Yes, very much.
Yes, sir, you are.
Yeah. Good afternoon, sir, and thanks for the opportunity. Sir, on the EPC side, how is the current execution activity? So, wanted to know, all our projects working with 100% labor force, or are we facing any issue?
Of course, during April and May, EPC activity was a bit installed. I think there's a lot of noise at your background. Can you? Hello?
Yes, sir. Oh, I'll mute my line.
Yeah, okay. So there were a lot of, because of pandemic, activities were of course affected, but we were still working almost on all the projects with somewhere with 50% of the labor, somewhere with 60% or 40%. But yes, it was not completely installed, but it was, work was going on. And in fact, we have, completed a couple of projects during this time.
Okay. And sir, in this new manufacturing unit, we have already secured, 8,400 metric ton of order, which is worth 70 crore, right?
Right.
But sir, you guided that maybe for the full year we can generate 100 crore kind of a revenue. But when I look at the
Right.
At 50% capacity, sir, we can generate 70 crore. So this plant has the potential to generate 150 crore kind of a revenue?
So this 8,400 tons, it takes time to deliver. I mean, we cannot deliver it like overnight. It takes at least 7 to 8 months to deliver it. So we expect to do around 10,000 tons during the whole year. 10,500 tons during the whole year, giving a revenue of about 100 crores.
Okay.
Yeah.
Okay, and so lastly, any order inflow guidance for current year?
So right now, we have a pending order book of about 1,000 crores, wherein EPC orders which are pending for execution is about 260 crores. EPC orders which we have received during last 2 months, about 300 crores, 325 crores odd. And we are expecting orders on LOI where we already L1 of about 80 crores. 70 crores is something which is coming from our new vertical, and Bangalore Metro is something which is 250 crores, which adds up to about 1,000 crores of order which is to be executed. I mean, most of the EPC projects will not be executed during this year, but will take 18 to 24 months to execute all these orders. And apart from this, we have regular orders from telecom sector for about 25 to 30 crores every month, which we normally don't undertake in the order book as such, because it's a everyday order kind of a thing.
Okay, and sir, how much we have won in FY21? Total order inflow in all the segments?
Order inflow in FY21 has been about, I will just give you the figures. We have received orders in FY21. What is the number we have? About? We've executed 170 crores, and the order. Yeah, but what is that we have received during financial year 21 is about. I can come back to you. I don't have those figures right in front of me, but we can get back to you with those exact numbers.
Okay, and sir, any revenue guidance or volume guidance for current year?
See, we have lost 2 months. Okay. Of course, we have lost some ground during last 2 months in terms of our EPC business, and especially for telecom also. But I believe we would cover it back by at least 30-40% in the next 10 months. So, all given take, if, the situation remains the case, situation remains good and there's no effect from pandemic or lockdown, we should be, we've done 600 crores this year. We should be at least growing by 40-45%.
40-45% revenue growth.
Yeah.
Okay. And margin would be 10-11%, right? In the band?
Yeah, typically in our line of business, EBITDA margins are in that range only.
Okay. Understood, sir. Got your point. Thank you so much, sir.
All right. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Kalpesh Kothi from Valentis Advisors. Please go ahead.
Yeah. Good evening, sir.
Good evening.
Yeah, so my question related to our two segments, steel structure and EPC. What we have seen in Q4, there is a sharp decline in the margin of the steel structure, whereas we seen a very good execution of EPC in Q4, which led to a higher EBIT.
Right.
So what was the reason behind the decline in the EBIT for the steel structure?
Okay. See, you've seen how the steel prices have moved, right?
Right.
The steel prices have gone through the roof during the last 6 months. Every month they have been increasing. And, in our line of business, though it is a pass-through, but that is not passed immediately, that month itself. So whatever we have sold in February and March, right, we had to buy raw material at that point in time, but the effects of those prices have come only in April and May. You understand my point?
Yeah.
So suppose we are billing to a telecom operator in March, okay? The price for his products are based on the average raw material pricing of February, okay? So similarly, the February prices are based on January raw material prices. So similarly, when the prices of the steel went up, especially during February and March, went up very high, wherein we were executing orders which were issued already in January and February, right? So the effects of new prices could come only in April and May.
So it's a fixed pricing contract?
No, that's what I'm saying. See, it's never a fixed pricing contract. See, what arrangement we have with telecom operators is that every month they decide a price starting from 6th of that month, 7th of that month to 6th of next month. Let's say we're sitting on June, 2nd June. So we are following a price which has been decided by them from 7th of May to 6th of June. And now this price is based on the raw material prices which were there in April, average pricing, right? Plus conversion. Now, suppose I'm buying something which is in May, the raw material, okay, and the price has gone up, correct? But I'm converting that into a tower and selling it during this month. So my margin on that particular tower goes down, whereas when I sell it in the month, next month, my prices would be higher.
Right.
So this is a cycle. It keeps on going. So, it averages itself during the year. But yes, if you see on a monthly basis or on a quarterly basis, the effect is reflected in a positive or a negative way, both ways.
Okay. So do it also affect our EPC margin?
EPC margins are not affected that much, except to the extent that probably the steel which we bought for civil foundations in March was at a slightly higher price compared to what we had anticipated, because some of the projects, yes, are of a fixed price contract. But in most of the cases, for transmission, we have a price variation clause. But in some cases, like doing a substation structure or a substation foundation or a installation of a complete new substation, you have a fixed price contract because the short-term contracts of about 4 to 6 months. So in those cases, there is no PV clause. So sometimes that risk comes in, yes.
Yeah. So, EPC also, procures steel structure, right? So it may be the inter-segmental sales.
Yes. It is.
So that will be at what price we do?
You mean from manufacturing to EPC, what price do we sell?
Yeah.
So, see, since the project is in the name of Salasar only, we are not selling to a third party outside. So, whatever is the contract value of Salasar with the ordering agency, let's say we have an order from HCPNL or GCPCL, at whatever price the order is, we sell at that price, plus the PV.
Okay. Yeah. So now, the price also softening, what we have seen of late now. And
the prices haven't softened down till now. Even yesterday, Jindal JSW has increased almost 3,500 tons per month. But yes, I think during the monsoon, prices should soften down. That's what we are also expecting. So suppose even if prices soften down now in the month of June, we'll have a price based on the May costing, which is high. So probably, this month our margins would be higher compared to what it was in the month of March. You understand my point?
Understood. Got it, point. So it's basically, it may be go up, go down, depending on the price.
Yeah. So it balances out itself over the year.
Yeah. Okay. Thanks.
Yeah. Anything else?
No, thank you, sir.
All right. Thank you.
Thank you. The next question is from the line of Sanaya Mahajan, an individual investor. Please go ahead.
Hi, good evening, sir. So I wanted to know about the utilization levels of the current financial year and what is the maximum out of it we can achieve.
Utilization of?
The utilization levels for the current financial year.
Utilization level or levels of the capacity? Current capacity?
Right. The capacity for the production.
Okay. So last year, as I said, we worked for about 10 months, 10 and a half months, because April was completely locked down. May we had started opening up in UP, and the labor started coming in, and in May we were working at about 40-50%. Last year I'm talking about. And then, from June onwards, we started running in both the shifts. So last year, our installed capacity is about 100,000 tons, which even if we achieve 80,000 tons, because of the mix of material, we consider this as 100%. So last year we did this year we did 62,000 tons during 10 and a half months, which I would consider almost 90%, 80% capacity. And this year again, of course, May and June, April and May have been full washout, but I believe it will take a couple of months to, come back to normal situation.
Right.
I hope that answers your question.
Yeah, that was helpful. Thank you. And another thing that I wanted to know, could you give us some information on the client front as to who are your top 5 clients and what is the contribution of theirs towards their revenue?
Okay, so we have a wide variety of clients in telecom. If I talk about, so we are the market leaders in telecom, as I said. We have Indus Towers, and we had Bharat Infratel, which is now part of Indus Towers. So Indus Towers is the biggest tower company in the world outside China, and they are our biggest clients, and we enjoy the maximum market share with them, among all the suppliers. Then we have American Tower Corporation in India. Again, we have 50% market share with them for whatever they roll out. And then we have Reliance Jio. So there are 3 major customers in the private sector which are our clients. And then we also supply towers to people like HFCL, companies like HFCL and BSNL. Or now recently we got on order from ITI for about 55 crores for towers. And apart from telecom towers, we are working with the state electricity boards, TGCIL, CORE, that is code for different states, for railway electrification. So in terms of, if I say top 5 clients in telecom, there are 3. And then we have UPPTCL, SCNL, Jharkhand. Then we have now Assam. We are working in Arunachal also. Recently, we got a project from BGCIL for about 235 crores. And in railways, we are working in Gujarat. We are working in UP, Punjab, Haryana, Delhi. And we are also working in Bangalore for Bangalore Metro. So all these are big clients. I mean, yeah. I hope that covers your point.
Right. So I wanted to know about that front only. So yeah, it helps. Thank you so much, sir.
Thank you. You're welcome.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Shagun Sharma, an individual investor. Please go ahead.
Hello, sir. If you can help us understand the opportunity size for the heavy structure unit that we have recently set up, and what is the maximum which we can cater to currently, sir?
So this unit is going to cover not many type of structures. This is dedicated to the customization as per the requirement of the customer. So we can build structures for ROBs, that is railway overbridges. We can build structures for flyovers, wherein you've seen, under the road flyovers, you have those heavy steel structures that we manufacture. We can make structures for power plants, we can make structures for big steel plants, wherever the expansion is happening. We can make structures for stadiums, airports, hangars, even prefabricated buildings or steel prefabricated buildings which are coming up. We can make structures for that. And, and we have put in one of the best machineries which are available in the industry. As I had mentioned, we already have orders of about 70 crores in this vertical. And we have started on a very good note, and we expect to grow substantially in this sector, sooner than later.
Okay, sir. And how do we procure orders under this division? Is it through tendering, or we secure orders from private companies who are currently executing the infrastructure project?
Well, it is. It's not free. I would give you an example. Most of the companies or the infrastructure providers who have bid orders, they'll come to us for the structure. That's number one. Plus, we are working with Tata Steel also. We are working. We've got a good order from them for expansion of their steel plant. So all the columns and structures and all the specialized structures, customized structures, is done by us. For them. So it's both ways. We haven't participated in the tenders as such. We have actually procured orders directly from the parties who either had bidded in some tenders and got the orders, or who are on the who require these structures for their internal use.
All right, sir. And so one last question: are there any plans to further increase the capacity once you achieve full utilization, sir?
I think we'll look forward to that. Yes.
Okay, sir. Okay. Thank you so much, sir.
All right. Thank you.
Thank you. The next question is from the line of Sarika Kukshev, an individual investor. Please go ahead.
Hi, sir. Congratulations for the good result. This current order book of 1,000 crores is to be executed during current fiscal itself?
No. See, the EPC orders are typically to be executed over 18 months to 24 months or even 30 months. Like we are executing order of Bangalore Metro, that's about 30 months order, right? Similarly, some of the orders are to be executed over 12 months, some are over 6 months, some are over 18 months. As on date, the orders which are under execution, which are likely to be closed within this year, would be about 300 crores, is what I'm expecting. Maybe around 250 to 275 crores. It's something which we are expecting to close within this month, and the rest of that would be going to the next year, and then year after that.
Okay, and over above that would be the structured 100 crores extra.
Yes, that's right. That's
Okay.
right.
And from telecom as well, we are expecting another flow of say 200-300 crores to flow in.
Telecom, typically we do, last year we did about 350 crores in telecom alone. So I expect those numbers to be even better, There's no reason that those numbers should come down. They should go up.
Perfect. Yeah. So there is no dearth of opportunity on this side, which is actually we can.
Sorry, I'm not able to hear that. Can you say that again, please?
So if we look at the opportunity side, from the numbers which are actually floating across, we don't see any sort of constraint, so to speak, in grabbing as many orders as we require. However, without getting into the trap of heating up and exposing our working capital and other sort of constraints, if we can probably explain at what point would we be comfortable aiming for a higher growth rate on the top line?
So, as I said, we have closed this year at around 600 crores, and I don't see any reason that we should not be doing a growth of 40-45% this year, in spite of 2 months being wasted or washed out because of pandemic. If everything remains okay, we are not affected by pandemic any further. And as far as capital concerns or working capital constraints are concerned, we have restricted ourselves to about 25-30% of EPC business. See, our sector business and our telecom business is less working capital oriented in terms that we can get the payments, within 35 to 30 days or even, maximum 60 days. Whereas EPC working capital cycles are longer, which stretches the overall working capital cycle for the company. So, and that is the reason that we restrict ourselves to maximum to about 25 to 30% of EPC business overall. So even if we do 250 crores, 270 crores next year, the top line should accordingly be, balance of that will be coming from manufacturing.
Yeah. So which segments would we be keen on getting more orders from?
See, we are always looking for good orders, whether it is from manufacturing or EPC. But now, since we have good order book, we normally restrict ourselves and we become selective in picking up the tenders where would we like to participate. We have an opportunity wherein we can even get 2,000 crores or even 5,000 crores order today. But that wouldn't help because number that we don't have capacity and capability to execute all those orders. Plus, we don't want to get into the rat race. So we normally pick up projects wherein we have, number one, the capability and capacity to execute, and we have margins. Just to increase the top line, we don't pick up the orders. We focus more on the bottom line.
Right. So, which segments would those be, which would be margin accretive or probably with the EPC ones? I believe every segment lucrative.
It depends. Some of the EPC businesses are better margin, are with better margins, some are not. So that's what I said. When we are, bidding for projects, we keep an eye on a definite margin availability, so that end of the day we are left with something. It's not that we should run high and dry after the project is completed. But yes, I would like to reiterate that we are more focused on manufacturing, wherein we have better working capital cycle. So, given a choice, we would prefer to take a manufacturing order of the same value compared to if it was a EPC project.
So if that's the case, then we should be investing more when it comes to the capacity at this juncture itself, because we already have a vision from the government as to what they actually are aiming for.
All right.
If we also plan to grow along with the size of the opportunity, we should be proactive.
Of course, you are absolutely right. And in fact, you're working towards that. And adding the new vertical is in that direction only. And plus, we have a plan on the anvil to put up a new galvanizing plant, which would add to the capacity. We are yet to announce that, but we'll do that sooner or later, because once it is finalized, we'll do that. You're absolutely right. We are thinking on the same direction.
Right. Thank you so much, and all the best.
Thank you.
Thank you.
Yeah. I'll just mention one more thing here. One of the participants had asked for the order received during this year. So EPC orders we have received for about 375 crores during the year.
Thank you.
Hello. Yeah.
Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Kaushik Thakrar, an individual investor. Please go ahead.
Good evening, sir.
Good evening.
Sir, I have three queries in my mind. How will 5G rollout be beneficial for our company if 5G devices can be installed on the existing towers?
So I just mentioned that in my previous answer also. There will be a lot of towers which will be utilized only for 5G, which would be new towers. And there will be a lot of towers wherein 5G antennas would be deployed on the existing towers itself. So it will be a mix of existing towers plus new towers. Yes, 5G presents a huge opportunity for companies like us, where a lot of demand for infrastructure would be required to seamlessly connect everyone on 5G.
Okay, I got it. And I have read somewhere that company is planning to enter in renewable energy and artificial intelligence also. Is it right?
So, see, we already do structures for solar power plants. So that is what we do related to renewable power. And yes, on the artificial intelligence side, we have done some, trials in-house, wherein we have tried to do surveys of towers through drones. And those are at very, very, nascent stage, I would say.
It is a remarkable growth for our company, sir.
Thank you very much. It's your company.
And sir, the third query in my mind is cyclone, like Tokta type of cyclone recently came. तो ये सब हमारे लिए बेनिफिशियल है या हार्मफुल है?
देखिए, ये पूरे देश के लिए, पूरी जनता के लिए नुकसान होता है साइक्लोन में. ऐसा नहीं है कि ये ठीक है, अगर मान लो उसमें कुछ नुकसान होता है तो उसका थोड़ा बहुत असर आएगा कि वहाँ नए स्ट्रक्चर चाहिए, बट ओवरऑल तो पूरे देश के लिए नुकसान है.
ठीक है सर, थैंक यू वेरी मच.
Thank you. The next question is from the line of Kamlesh Shah from Disha International Limited. Please go ahead.
Hi, Shashank bhai. Congratulations, sir.
Thank you.
Yeah. Can you explain me, I see the balance sheet that there is a huge increase in the other income from last year from 170 lakhs to 1,000 lakhs. So what is it consist of?
So, Pramod, would you like to answer that?
See, mainly out of this, around more than 200 crore rupees is from the interest income and all that, and some amount of 8 crore rupees is around probably in the value increase, whatever investment we are having basically as per accounting standards. So this is this is out. It's around more than 202 crore is interest income, and approximately 8 crore is that particular income increase in the value of the investment.
Value investments. So basically, that was the main part of the increase in income for the current.
Yes.
Okay. So after issuing the bonus, what percentage of the revenue will increase in the next year?
See, revenue doesn't have any relation with the bonus issue as such. The bonus has been issued.
The capital will be doubled.
Yeah, the capital would be doubled. Of course, I mean, it's a bonus share. Company is not getting anything by issuing bonus share. I mean, we're not getting. I mean, the capital is increasing.
The relevant IPS will come down, no, for the next year if the income is not increased.
Sorry?
So what will be the expected revenue or income from the operation from the next year?
So, as I said, I mean, this is irrespective of the bonus issue. I mean, bonus issue has got nothing to do with the revenues of the company. I mean, by issuing the bonus share, the company is not getting any additional revenue, number one, not additional capital. It is being issued from the reserves and surplus of the company. That's number one. As far as the revenue top line is concerned, I've already mentioned that we're expecting a growth about 40-45% next year, in spite of the pandemic, what I've been through.
So you will be able to cross like 1,000 crore income in the next year?
See, 40% doesn't, add up to 1,000 crores, my friend.
Okay. So,
yeah.
Okay. I understand.
Thank you.
Yeah. Thank you very much.
Thank you, Congress.
Yeah.
Thank you. The next question is from the line of Sharad Singh, an individual investor. Please go ahead.
Hello, sir. Good afternoon, sir. Sir, so you said you expect a 40% growth in the next year, and you've said you're looking to restrict your EPC segment. So where is the growth expected, and what can the margins look like next year? Any change in margin profile?
So 100 crores we are expecting from the new vertical which we have just started, as I said, for the heavy structure division. Okay. And telecom and other structures would also grow by 10 to 12%. Because there are two reasons. One, the steel prices are already high, and plus that we'll try and do more tonnage. So on both the fronts, that would increase. And EPC business, out of, as I said, would be around 250, 260, 270 crores somewhere. So that should add up to around 850 odd crores plus minus on the top line. As far as the margins are concerned, we typically operate at 10, 10.5%, 11% EBITDA margins. I mean, given the best case scenario, it will be 10.5%, 11%. Worst case scenario should be 9.5% to 10%.
Okay. Thank you. That's all. Thank you so much.
Thank you. Thank you.
Thank you. Participants who wishes to ask a question may press star and one now. As there are no further questions, I would now like to hand the conference over to Mr. Agarwal from Salasar Techno Engineering Limited for closing comments.
All right. If there are no further questions, then I would like to thank everyone for the participation in our Q4 and FY2021 earnings call. In case of any further queries, you may get in touch with Pareto Capital Advisors, or feel free to get in touch with us, and we look forward to interacting with you in next quarter. And I would like to wish everyone a great day and keep safe during this pandemic. Stay safe, stay healthy. Keep distance, wear mask. Thank you very much.
Thank you.